Opendoor Technologies, ticker symbol OPEN, just closed Monday's session up 19 cents, or 2.38%, finishing the day at $8.16 per share. It traded as high as $8.48 during the session before easing slightly into the close. Now, on the surface, that might not sound like fireworks, but the context here matters. This is the highest weekly opening level we've seen in some time, and it's happening right as we enter a catalyst-heavy stretch that could define the next phase of Opendoor's recovery story. There wasn't one single news item driving today's move. There wasn't a new press release, or a headline deal, or a major analyst note. Instead, what we're seeing feels more like a sentiment build. A quiet shift from caution to conviction. Investors are starting to anticipate what's coming. We've got the Federal Reserve's interest rate decision scheduled for this week, a key macro event that has direct implications for housing affordability and transaction volume. And then, just days later, we have Opendoor's much-anticipated earnings open house, which CEO Kaz Nejatian has already framed as more than just a quarterly report. It's going to be a dialogue, a chance to communicate how far the company has come in reshaping its operations, technology, and culture. So let's talk about what's going on here, and what it tells us about where this stock could be heading next. First, today's price action is important technically. The stock pushed through that 780 zone that's been a magnet for the last few sessions and climbed into the low 8s, topping out near 848 before settling at 816. For traders, that's a clear breakout signal, a move into a new range after several weeks of consolidation. For long-term investors, it's a sign of resilience. Each time this stock has tested support around $7, it's bounced, and each time it's bounced, it's done so on improving volume and sentiment. That's accumulation behavior. And that's worth paying attention to because accumulation tends to precede the kind of breakouts that catch broader market attention. Now, it's easy to forget, but this time last month, the narrative around Opendoor was still uncertain. We had a company with a bold vision, but a stock struggling to convince the market that it could execute in a challenging environment. Fast forward to today, and several things have shifted. First, the housing data has been steadily improving. The September report showed better-than-expected existing home sales and a mild improvement in affordability metrics. Nothing explosive, but enough to suggest that the housing market may be stabilizing. That's huge for Opendoor because its business model thrives on activity, not necessarily on rising prices. It needs liquidity. It needs homes moving. And that's starting to happen again. Second, we've seen visible confidence from leadership. Kaz Nejatian has been more active on X than ever, posting about efficiency, AI advancements, and even internal company culture. His tone is confident, his messaging clear, and his engagement with investors has been refreshing. In one of his recent posts, he talked about Opendoor's AI valuation models, which use over 500 data points to determine home prices, something he compared to his experience at Shopify, where machine learning models revolutionized merchant underwriting. The message is simple but powerful. Machines are better at pricing things, and Opendoor intends to let them. That's not just a catchy line. It's the backbone of a long-term strategy to make Opendoor the world's most accurate and scalable home pricing platform. And investors are beginning to understand that. When a CEO starts talking about machine learning, data infrastructure, and world-class models, and ties that to margin improvement and operational efficiency, it shifts perception. Suddenly, Opendoor isn't just an iBuyer. It's a data company that happens to operate in real estate. And that's a very different story. We've also had notable investor validation in recent weeks. Alfred, a well-known fintech and crypto investor, disclosed that he had taken a 210,000 share position in Opendoor at an average price of $6.44. He said he believes the company has a massive opportunity to reshape the US real estate and mortgage market. When investors like that start to plant their flag, it tends to signal something deeper. It says there's conviction forming, conviction that this company isn't just surviving, it's building. Combine that with Eric Jackson's continued presence online, championing the open army, and you start to see a leadership culture that is both accessible and aligned. That combination, confidence from management and belief from investors, is often what precedes bigger moves. Now, let's zoom out and look at the macro picture because this week is all about the Fed. The Federal Reserve's upcoming rate decision has markets on edge, but in a cautiously optimistic way. We've seen long-term yields start to ease in recent sessions, mortgage rates have nudged slightly lower, and inflation data continues to cool. If the Fed delivers a steady or dovish tone, it could immediately lift sentiment in housing-sensitive names like Opendoor. That's because every basis point lower in mortgage rates translates into a measurable increase in affordability, transaction flow, and homebuyer intent. It's the oxygen Opendoor's model needs to scale. And that's why today's climb, though modest, is significant. It's pre-positioning. Investors are anticipating that the Fed might not just avoid further tightening but might even signal an openness to future cuts if the data cooperates. That kind of macro shift can flip the narrative for housing stocks overnight. Remember, the stock market moves on expectations before it moves on data. So, when you see Opendoor climbing ahead of the Fed meeting and the earnings call, what you're really seeing is a market starting to lean toward optimism. Speaking of the earnings open house, that's the next major event after the Fed. It's not just another earnings call. Kaz has framed it as an open conversation with shareholders and analysts, where the focus will be on transparency, engagement, and laying out the next phase of Opendoor's evolution. There's a reason it's being branded differently. It's meant to feel more like a leadership briefing than a defensive call. And that's smart. Because right now, what investors want most is clarity. They want to know what's working, what's improving, and what's next. Expectations for this quarter are modest, but that actually works in Opendoor's favor. When expectations are low, even incremental progress can look like acceleration. If the company can show measurable improvement in margin efficiency, transaction volumes, or even early AI integration results, it could be enough to spark the next leg higher. And let's not forget, we're still early in Kaz's tenure. Much of this quarter was inherited from prior leadership structures. So any signs of improvement now would hint at even greater potential in future quarters once his strategies take full effect. From a technical standpoint, here's where things get interesting. The $8 range has been a resistance zone since early October. Breaking above it today, even briefly, is an encouraging sign. The next key level to watch is around $8.50, followed by psychological resistance at $9. If we see the stock push through that range with decent volume, it could open the door for a retest of the $9.50 to $10 range that we last saw back in early summer. And remember, the fundamentals are catching up with the technicals. That's what gives these rallies staying power. The volume pattern over the last several sessions has shown increasing accumulation, meaning more buying on up days than selling on down days. That's a textbook signal of quiet accumulation, often seen before larger institutional inflows. So even though we didn't have fresh news today, the setup looks better than it has in weeks. Now, let's talk sentiment. There's been a subtle but noticeable shift across social channels and investor discussions. Where just a month ago the talk was about survival and dilution, now the focus has moved to growth and execution. People are starting to see the potential in what Opendoor is building, not just as a housing company, but as an AI-powered infrastructure play. The company is streamlining operations, cutting redundant SaaS contracts, and investing in machine learning models that could permanently reshape how it prices and purchases homes. That's not speculation, that's the playbook of a company preparing for scale. When you combine that kind of operational discipline with the timing of macro catalysts, it starts to look less like coincidence and more like preparation. So where does that leave us heading into Tuesday and beyond? It leaves us with momentum. We're seeing confidence return, volume build, and anticipation grow ahead of two potentially defining events, the Fed and the open house earnings call. That doesn't guarantee smooth sailing. Volatility is part of the game, especially in the week of a major macro event. But it does mean that investors are finally starting to believe again. And that's the key. Because in markets, belief always precedes validation. So as we close out Monday, the story is simple. Opendoor's back above 8. It's holding its gains. Leadership is visible and confident. The macro tide is starting to shift. And while no one can predict exactly what the next few sessions will bring, the ingredients for a breakout are all here: strong leadership, improving fundamentals, and a market hungry for turnaround stories. It's been a long road for Opendoor shareholders, but this might be the moment where patience starts to pay off. As always, time will tell, but for now, the tone heading into the week ahead is clear. Momentum is building, and Opendoor looks ready for what's next.